Gold IRAs versus Roth IRAs. Which is the best choice for your retirement needs? Both Gold IRAs and Roth IRAs offer valuable tax advantages for retirement savings with key differences. To read the full article right now, see the link in the video description. To start, a Gold IRA is funded with pre-tax dollars, which reduces your current taxable income, and withdrawals are taxed later at a future rate. Conversely, a Roth IRA is funded with after-tax dollars. This way, your investments grow tax-free, and your withdrawals can also be tax-free, depending on certain conditions. Similarities and differences. While there are several similarities between traditional and Roth Gold IRAs, there are also key differences that you need to be aware of. Both traditional and Roth Gold IRAs offer tax advantages, allowing you to grow your retirement savings in a tax-deferred environment. They also offer a degree of flexibility and control, allowing you to choose from a variety of gold and other precious metal investments. Traditional Gold IRAs are funded with pre-tax dollars. This means you get a tax deduction up front, which reduces your current taxable income. However, you'll pay income taxes on withdrawals in retirement. It's a way to defer taxes, fundamentally paying them at a future date. Roth Gold IRAs, on the other hand, are funded with after-tax dollars. This means you pay the taxes up front, but your investments grow tax-free. It's a way to pay taxes now, avoiding them in the future. Another key difference lies in their funding mechanisms. Traditional Gold IRAs can be funded with cash or rollovers from other retirement accounts. Roth Gold IRAs can only be funded with cash or conversions from traditional IRAs. The choice between a traditional and a Roth Gold IRA largely depends on your current tax situation and your expectations for the future. If you anticipate being in a lower tax bracket in retirement, a traditional Gold IRA may be a good fit. If you anticipate being in a higher tax bracket, a Roth IRA might be the better option. Eligibility Criteria Comparison. From understanding how Gold IRAs work and the tax implications and funding mechanisms of traditional and Roth Gold IRAs, it's clear that these investment options can offer substantial benefits. But to tap into these benefits, you must first meet certain eligibility criteria. I'll be comparing these guidelines for both types of Gold IRAs, giving you a clearer picture of what's suitable for you. One of the key benefits of traditional Gold IRAs, anyone with earned income can contribute. It's open to all, irrespective of your income level. This broad accessibility makes it a fine option for many investors. On the other hand, Roth Gold IRAs have an income limit for eligibility. For 2024, it's $161,000 for individuals and $240,000 for married couples. If your income exceeds these thresholds, you won't be able to contribute to a Roth Gold IRA. This hurdle tends to make Roth Gold IRAs less accessible compared to their traditional Gold IRA counterparts. In the end, the choice between a traditional and Roth Gold IRA comes down to your individual circumstances, including your current income level, your expected income in retirement, and your overall tax situation. Just a quick interruption to thank you for supporting our channel. Please like and subscribe if you enjoy this video content. It really does make a difference. Now back to the video. Funding mechanisms explored. Diving into the mechanics of how each IRA is funded, we'll find that they operate quite differently. A traditional Gold IRA is funded with pre-tax dollars. This means that the money you contribute to this IRA reduces your taxable income for the year you make the contribution. So, if you're in a high tax bracket now and expect to be in a lower one when you retire, this could be an attractive option. On the other hand, a Roth IRA is funded with after-tax dollars. You pay taxes on your income before you contribute to the IRA. While this may not seem appealing initially, it's worth noting that Roth IRAs offer tax-free growth and tax-free withdrawals in retirement. This can be a significant advantage if you expect to be in a higher tax bracket than you're in now. The limits on how much you can contribute to either type of IRA are the same. In 2024, the limit is $7,000 if you're under 50 or $8,000 if you're over 50. This limit applies to the total of all your IRA contributions, not per account. Tax implications upon withdrawal. Understanding the tax implications when withdrawing from your IRA is essential to your retirement planning. The type of IRA you hold, either a Gold or Roth IRA, greatly influences these tax implications and IRA withdrawal rules. When you withdraw from a Gold IRA, the distribution is treated as ordinary income and is subject to income tax. Again, this is because Gold IRAs are funded with pre-tax dollars. The tax rate applied will depend on your income tax bracket in the year of the withdrawal. If you make an early withdrawal, before age 59 and one-half, you may also be subject to an additional 10% penalty. On the other hand, Roth IRAs are funded with after-tax dollars. This means that qualified distributions from a Roth IRA are tax-free. You won't be taxed on the original contribution nor the gains made. However, there are certain conditions to meet for a withdrawal to be considered qualified. These include: the Roth IRA must have been open for at least 5 years. The withdrawal must be made after you have reached age 59 and one-half. The withdrawal could be due to a disability, for a first-time home purchase, or because of your death. Making the strategic choice. Choosing between a Gold IRA and a Roth IRA can feel like maneuvering through a financial maze. Both offer unique benefits, and the ideal choice depends on your personal circumstances, future expectations, and financial goals. If you're merely looking for a safe haven for your retirement savings, particularly in times of economic uncertainty, a traditional or Roth Gold IRA are suitable. These self-directed IRAs allow you to invest in physical gold, providing a hedge against inflation. Finding the right Gold IRA company for your individual needs is critical. For example, if you require a low investment minimum to start a Gold IRA, Birch Gold Group or American Hartford Gold would be two choices to consider. However, if you are a serious high net worth investor who can afford a higher minimum to take advantage of the most competitive gold prices, then Augusta Precious Metals would be a good fit. Furthermore, Noble Gold Investments provides Gold IRA as well as private investment options for home storage. Decide based on your individual needs. See the links in the video description to find the Gold IRA company that best serves your needs. In summary, the best choice ultimately depends on your individual financial goals, risk tolerance, and retirement timeline. Whichever you choose, keep in mind the tax implications and eligibility criteria. I hope this guide has clarified things for you and empowered you to make an informed decision. Here's to a secure and prosperous retirement. If you have $100K of retirement savings to protect and want to take advantage of the best gold prices, see the link in the video description to attend a free gold investing webinar hosted by Augusta Precious Metals. Happy investing, and thank you for watching.